last topic of conversation for today, Patrick, is short-term rentals. The BC government, I should say, British Columbia,
British Columbia, yes.
the BC government has taken a pretty hard line here with short-term rentals, and we have a lot of investors that are freaking out. Now, you and I, Patrick, and I wish I had a timestamp on this because you and I have always told investors to be a little wary and cautious of two types of strategies, which are quite fickle. Yes, they provide better cash flow, but they're fickle. That is the student rental market, and that is the short-term rental market. And when I've been telling investors, don't go change your entire portfolio over to short-term rentals just because you can go get a few extra bucks out of it. And those that listened are happy. Those that did change their entire portfolio over to short-term rental are kind of freaking out right now, Patrick.
This is fine.
Because the BC government has taken a hard line. So tell us about that, and then we'll tell you what you can do as an investor if you're being kind of taken by this.
Well, fundamentally, they've made the change that short-term rentals are off the table unless they're in your home. Like literally, you have to be, it's got to be part of your residence. So everything else is off the table, which is going to be problematic for those investors who actually bought units that were very specific to short-term rentals. So in other words, that was their strategy going in. So they're changing the dance step by May 1st, 2024. It has to be shut down. You have to register. There's a whole bunch of little details that you have to embrace. But their goal ultimately is to get long-term rental stock onto the market. What's interesting about that, JG, is it will be, I think, you're going to see some real increases in rents in many BC markets because of that.
What? Okay, fine. I'm cool. I'm fine.
I think that, if you're not doing a short-term rental and now you've kicked everybody out, you get to reset rents. And if you're going to do a long-term rental, I think you're going to really push the edge of what you can get for rents. So I think there's going to be some downside to this initiative, which is increasing rents as these short-term rentals come onto the long-term rental market.
Patrick, I'm absolutely shocked and flabbergasted that the government made a decision, didn't think it through all the way, and it may have a negative repercussion on the very thing they wanted to impact. I'm surprised by that, Patrick.
I know, it's shocking, isn't it? Unintended consequences. How can that be? So, it is interesting that we talk about this all the time. Government politics over policy. I think this is an example. Let's cut off our nose in spite of our face to make sure that the voters are happy, or the perception of what we're trying to fix. And I don't think they're going to fix anything. I think they've taken too hard a line. And I get it, in certain neighborhoods, it does sometimes make sense to do that. And, Port Coquitlam did that, for example. I think Surrey might have done a segment. Anyways, my point is that they then have to qualify what's happening in those areas where there's a lot of tourism. What do they do with that? And they have to then qualify that. And there are some centers that they're going to make exceptions, but it's all more bureaucracy, more things to do. We'll see it all unfolds. Anytime the provincial government puts an initiative in, I'm skeptical.
I wonder, Patrick, if Marriott and Hilton have any lobbying efforts in this direction. I'm just curious. I don't know, maybe.
Yeah,
maybe.
Who knows?
So for those of you that have short-term rentals and you're freaking out, by the way, if you're not in BC right now, and if you're thinking, phew, I just dodged a bullet because I'm in Alberta, or I'm in Saskatchewan, or I'm in Ontario, wherever you are, if you're thinking, phew, I just dodged a bullet, I'm not in BC. Folks, you don't have to be a genius to look at the trend here of what's been happening. New York City did it. Toronto did it. Many cities are doing it. And if the cities don't take it on themselves, the provinces are getting involved and doing it. So I think it's a pretty fair statement, Patrick, to say this is going to continue. And is it going to hit every single market? I don't know, but this is definitely something that will continue. So if you're a real estate investor and you have short-term rentals in your portfolio and you're kind of freaking out, here's a couple things that you should be thinking about right now. We'll break it down for you. Number one, you can take a chance and operate on the black market. That is a possibility, Patrick. You and I don't recommend it, but that is a possibility, which is I'm just going to ignore this and I'm just going to operate anyways. It's an option. I don't recommend it, but it's an option.
Well, I think, yeah, you can't we're not going to recommend any of that. I mean, it's a real risk to do that because when these things happen, of course, you're going to have neighbors that are unhappy with the short-term rental and they're living in maybe in the building as a permanent residence of that particular building. Maybe they're an owner or they're a long-term renter. They don't like short-term rentals. They don't like the turnover, the noise, all of the things that go with it sometimes. And so you're really putting yourself at risk in terms of even just being reported. So I don't think, depending on the building, you're not going to get away with it for long.
Option one, operate on the black market, not recommended. Option two, sell the property. That is an option for some people. They might say, you know what, because some people, Patrick, if you just bought this property last year, for example, you bought it at the height, it's currently in a dip, you're thinking, oh man, I can't sell this property. But some people have actually held these properties for a long time. And this may be an opportune time to sell the property, get it vacant, sell the property, and cash out on the property. Again, not something that's not recommended for everybody, but for the right investor who's held the property for enough time, this definitely could be an option. Is this may be a good exit point for you? That's number two. Number three, convert to a long-term rental, which is exactly what they want you to do. The challenge becomes, Patrick, is a lot of people are cash flow negative because they bought these properties at the height of the market, or they have recently refinanced at much higher interest rates. And as a result, converting to long-term creates cash flow negative for some people. So I will say two things, and I'll let you jump in for comments. Number one, that could be a short-term cash flow negative situation. May not be cash flow negative forever. And I think a lot of real estate investors kind of, what the situation is today, they assume it's going to be like that forever. Like for example, Patrick, 18 months ago, they were geniuses and they thought they'd be geniuses forever. And now today they're not, they're feeling like, oh man, these rates are higher. I'm not cash flow positive. That won't last forever because eventually you will refinance at a lower rate and you will bring up your cash flow. So that cash flow negative component of it does eventually go away, but it could be a little uncomfortable for a while. 6 months, 12 months, 18 months, 24 months, maybe more.
Well, I think there's a couple things around that. Yes, it could be uncomfortable. We were warning people back in middle of 2022, I think it was, to make sure that you're not over leveraged and that you got some cash available. And ultimately, what's happening if you bought 2, 3 units? It's one thing to say, well, it could be negative cash flow for a while, but if you own 2, 3, 5 units, all of a sudden you're upside down several hundred or maybe a few $1,000s a month. A little bit tougher to carry. What is interesting about option number two that you gave, which was to sell, with interest rates, if they do, in fact, which we believe they will, if they do a hold, a pause next week,
or a cut,
yes, or a cut, it could, in fact, kind of spike the market. I don't want to say spike, but it could bring the market back to life a little bit in terms of buyers. Buyers like stability, and all the rates are still high. Okay, they're not going to go higher. We may see some buyers come into the market because that's the fear that some people operate on top of, which is these rates are going to go to 18%. They're still living into that old story of what was happening in the 80s. And so now that they've got a pause, we may see a little bit of a pickup, and you might be able to exit some of those properties if they're upside down.
Good. Next, another option, folks, is to bring in a joint venture partner. This, Patrick, we are actually in the middle of hosting a Raising Capital and Strategic Partnerships event. And folks, if you want to find out about that, you definitely got to get registered for that. We're doing information sessions on this. This is a course we offer at the Real Estate Investment Network. It's called Raising Capital. But this is a great idea, Patrick. Bringing in a joint venture partner. If you're going to be cash flow negative, you could bring in a JV partner to offset that cash flow negative component in exchange for some equity. And as a result, you don't have to be cash flow negative, and you could partially exit, but keep a partial upside of the future.
Yeah, that strategy is such a good one, especially if you're really upside down, you're feeling that pressure. You go, I can't afford the extra $500, $800 a month. What's interesting about it, if you've got a property that's got some equity in it, particularly you bring a joint venture partner in, if they can see the future, if you say to them, if the joint venture says, okay, I'll cover that $800 a month. And, you look at it, and you go, well, that's better than having to write a check for a down payment on a property. I'll spread my down payment, if you will, over, and I'll cover the $800 a month. Now you're breaking even. That's all great. And the joint venture partner has an equity stake in that property. So, it's just a way to structure the deal so that you can get from underneath the weight of carrying it and share in that particular property with a joint venture partner. It's a way for the joint venture partner to get in without scratching a big check for a down payment.
And there's a lot of people, and this is a brilliant idea, Patrick, because there's a lot of people out there that have good jobs, make good cash flow, and they even have the down payment, but they can't qualify for the financing. This is a fantastic way to bring in a JV partner who can easily afford this, but they can't qualify for financing. This property already has financing arranged. Great way to bring in a JV partner. And I'll go one step further, but I can't go too far on this because people are going to say, hey, tell me about that. Come to the information session, folks, on raising capital if you want to know more about this. But Patrick, this is a brilliant RTO, rent to own strategy, where you could bring in an RTO partner in order to cover that shortfall, in order to then exit that market, exit that property in a future market.
100%. And once again, this is all stepping back, taking a moment to plan, kind of take a breath, and then put a strategy together, put a plan together, and then execute on the plan, JG.
Another option, ladies and gentlemen, is go student rental. Okay, you could take your short-term rental, change the tactic, go student rental on it. Again, there's quite a few, let's call them barriers that have been introduced for student rentals. But student rentals cash flow better than long-term rentals. Do they cash flow as well as short-term rentals? I don't know about as well, but definitely better than long-term rentals. So some people transfer their short-term rental to a student rental. They still might be able to get at least to cash flow neutral, if not slightly cash flow positive. That's another good idea. And I'll finish with this, Patrick, and then you can comment is a lot of people, when we make these kinds of suggestions, that if you have 3 or 4 properties, your mind automatically goes to like all or nothing, meaning, okay, I'll transfer all of them to student rentals, or I'll go, long-term rental on all of them. This is not an all or nothing conversation, folks. If you have 2 or 3 or 4 or 5 or 10 properties that are all short-term rental and they're all at risk, you might decide, okay, I'm going to take 2 of them. I'm going to go student rental. I'm going to take 2 of them. I'm going to go cash flow. I'm going to go long-term rental. I'm going to take 1 of them. I'm going to do a JV deal, and I'm going to sell 1 of them. You could mix and match your strategy here in order to do the best thing for the entire portfolio. Instead of it looking at an individual property basis, look and consider the entire portfolio is where I'm going with this, Patrick.
Yeah, and I think, again, we have to look at the market that you're in. I mean, the number of international students that have come into Canada and the lack of housing for those international students definitely opens up opportunities if you're in the right market. So you have to look at what's going on in your market, whether it be colleges or universities, whatever those international students are coming in, they need housing. I mean, they're desperate for housing, for example, in Toronto, as one example. I think Victoria is another area where they're really strapped for housing for international students, for students in general. And so that really serves, there's a gap there that needs to be filled. And it is one option for investors to consider.
And if you want a good step forward in terms of figuring out, I wonder how the student population is doing in my particular city. Because Patrick, you just named 2 big centers, but I got to tell you, go look at the colleges and you can actually get their enrollment statistics. Go look at their enrollment, see what's happened in 2021, 2022, 2023, and you're going to find out which centers need student housing. Because Peterborough, it wasn't on your list, Patrick, but let me tell you, people are starving for student rentals around here. And many, Barrie, Ontario, anywhere where there's a college where enrollment's up significantly, you're going to find a need for student rental there.
Well, and back to the headlines. That is the one headline that you're going to see in any given region because it's a huge topic, and so you can count on it. If you got a college or university in your city, there's going to be controversy and lots of conversation about how international students can't find a place to live. They're living in the streets. They're living in bedrooms that are walled off with blankets. 7 people sharing one bathroom. There's all sorts of stories going on in different centers. But that will, in fact, be in the headlines. That'll be a good indicator for you if your region is in need of student housing.
So that covers short-term rentals, Patrick. I think there's some good advice there for investors on what they should do next and how they should take this seriously and how they can perhaps read, react, and adjust their tactic accordingly.
And not wait till May 1st, 2024. When everything kicks in on short-term rentals in British Columbia. Plan ahead. Be prepared. Plan
ahead. Hey, what's the saying, Patrick? I thought you were going to pull it out. It's definitely your kind of saying. What is it? Fail to plan or you plan to fail. Fail to plan and you plan to fail. That's a Patrick Francie 101 right there.
Well, that's not mine. I mean, that's old,
Well, that's,
The other one
that's
is
why I said it's yours, because it's old.
Thanks, JG. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.